What was
That
you
was
go
an
for?
email address.
Oh, what am I doing? That you're building a future on property.
Email is a system
Email is
where
gone.
you can type an
It's
email.
gone. Hey guys, welcome to episode 9 on YouTube. Welcome back, guys. Don't forget to thumbs up, comment, and subscribe. We've got an interesting interview. I'm not going to say any more. Over to you. Introduction. Who are you? And what are we talking about?
Well, we catch up fairly often, but this is the first time we've caught up on video. My name's Duncan Krieger. I consider myself to be an entrepreneur. I have some successful business history and some exciting business plans moving forward. So mainly focused around property, real estate and finance, really. Left school at a very early age, fell into property jobs and just had a real passion for property and refurbishing property and development and income.
The list goes on and on and on. So let's start from, let's go from the beginning of when was your first major break in business and how
A few
did that come
mistakes
about?
before I had a major break.
Okay.
Some failed businesses first. Most notably, I can think of Poker Club that I opened in Camden. Do you even know?
No, I
this?
didn't know this.
Never heard about
I like these stories.
Yeah. I've always thought about, I get bored very quickly, so whenever I'm on holiday I'm looking around the beach thinking there's a lot of empty beds here, the guy's charging €5 a bed, what if he charged €1 a bed, he could probably sell out and get someone to help him, he could sit at the bar and drink margaritas while someone else collects his money. And that's just a theme that I still look at things like that today. So I mean, one of the very, very first things I remember doing, I was on holiday with my 5 boys, my 5 friends who we're still a group of 5, and it was somewhere like Lanzarote or some people like going there, but something like that, cheap and cheerful holiday. And there was a alloy wheel shop next to our hotel. Okay. And everyone else was like going to sit on the beach every day, and I was thinking they're quite cheap actually. I've just got a car. I'm looking at a whole set, thinking they were like, I'm going to make the numbers up. It was like £200 for a whole set, whereas on eBay they were like £250 a wheel. Yeah. And me and a friend of mine, Adam, we bought 5 sets and we shipped them back to London. Yeah. And they sat in my garage for about 4.5 years. Okay. Before my mum forced me to get rid of them, and I think just dumped them in the end. I don't even know if we had a plan at the time of how we were going to sell them. I think we put some on eBay. I think actually from memory we sold 1 set and one of the wheels had a bit of damage on it. The whole thing was a complete and utter nightmare. Yeah. But it was a sort of start of me thinking, you can buy that for £1 and sell it for 5, and you can do that 50 or 60 times, then that's really how business works. And until now I've always been very focused on how much do I have to spend and how much can I make, and just figure out whether this is a viable business. Just go back to basics, which is slightly different when you start talking about tech ideas and building tech platforms. But that was a failure. That was a catastrophic failure.
How did the Poker Club come?
The Poker Club was, well, I've never really been a gambler. I'm not really that interested in taking a punt. I like to calculate risk. So I always thought that if you were going to go to a casino, you better be in the house than the other side, and that was just something again that I really thought passionately that you'd be mad to want to be a gambler. Owning the casino is the way to go. A friend of mine approached me about opening a poker club. He was a big poker player. He still plays a lot of poker. He was putting half the money up. We put in about 100 grand each actually. It was a lot of money to me at the time. I'd done some property deals. I'd made more money than I ever thought I was going to make in my life. I'd been to Porsche. I'd bought a 911, put it on my debit card in my early 20s, and I wanted to kind of follow my dreams and try something new. Everybody said I was mad. The only person who didn't actually say I was mad was my dad. Even though he thought I was mad, he was just sort of happy to let me get on with things. And we opened a poker club in Camden on Royal College Street. It was 2 floors. Upstairs was all it was like the tournament room. Downstairs was the cash games. It was a casino. You know, we had CCTV like hooked up. And we had bouncers on the door, and we were full every night. But we made some fundamental errors. And the real error that caused us to close the door was that, well, there were some interesting things. Firstly, I got very involved in the UK PCA, which is the UK Poker Clubs Association, where they were lobbying with the government about arguing poker being a game of skill or a game of luck, which has been an age-old argument about whether it should be regulated by the Gaming Act. And I just enjoyed getting dragged into all of that. It was interesting, and obviously I was fighting hard. I didn't really give a shit, and I don't know the answer, but the lawyers didn't really know the answer either. But the one thing that we got wrong was that the business was structured as a private members club. That's how it had to be structured. And if you can imagine, the whole borough of Camden has got certain rules for how long you can stay open, whether you're a members club or a bar, or you've got liquor licenses and everything. And we basically opened a poker club this close. So if you can imagine, this is the boundary for where you're allowed to stay open 24 hours a day. We opened a poker club here. And the council came and knocked on the door and said, we know you're a private members club, but you have to close your doors at 11 p.m. And we were like, well, that's not going to happen because things don't kick off till 11 p.m.
Yeah, exactly.
And they finish at 6 a.m. And it cut a long story short, we weren't allowed to stay open during operating time. So we were starting to turn it around. I mean, the business was tough. And I had a full-time job at the time, so I was going from my full-time job, finished at 6 p.m.
We should definitely revisit this. So after obviously that business, I'm assuming that was closed and moved away.
Yeah.
How did you then go from there to?
Yeah, so my big break really was a lending company that I started called West One Loans. I started with a friend of mine. We started in my bedroom, actually in a flat in Watford. Okay. Around the corner. I basically had a few property related jobs. In the end, my dad was a mortgage broker and he was in Stanmore, and he said, why don't you come into my office? And this is only like 17, 18 years old. Yeah. So I'd had a handful of jobs, but that's because I don't respond well to being told what to do. Yeah. So it's like, can you do this? No, you, that's not what you employed me for. Fine, okay, well you might as well just go. Fine, okay. So I went through a few of that. Yeah. As I'm sure you know. And I started working with my dad. He was a mortgage broker, and I was introducing people who needed to borrow money to not just high street banks, but also to these independent type of short-term lenders called bridging loans. And I built up a relationship with one of the biggest lenders in the country just by doing what I normally do, which is I want to know who's in charge, and when I know who's in charge, I pick up the phone, introduce myself, tell them I want to meet them. And I just think that's a valuable lesson for anybody. I think you're going to ask me 5 questions.
So is that lesson 1?
This is lesson 1, yeah.
Find is at the top.
For me it's simple. If you get a new job, first thing you should do is find out who's in charge. Go knock on their door and introduce yourself.
I did that.
So a lot of people, they get a job, they sit at their desk for 3 years. They know there's some people who make decisions, but they never really talk to them because they're just. And I just think that's fundamentally wrong. And as an employer, which I was for a long time, or I still am in various companies, the people I respond best to are the ones that come and introduce themselves to me and tell me who they are and what they want. Because people just assume, well, he should know that I want a promotion. Obviously I want a promotion. Well, actually, there's 3 people who came and told me they wanted a promotion, so they're the people that are getting promoted. So I think the lesson is, speak up, go and make yourself known. More often than not, the way I used to do it was, I've got a job here, which means I really want to work here and do a good job. Can you tell me what you want from me to do my job better? It's not about what can you give me, it's what can I give you.
And then you end up being like, geez, I can't really give this guy much more. They keep doing it. Right, okay. They know you.
And then look, if you fail from then, it's probably because you're not very good, or you haven't learned, or you haven't listened. But you've definitely had the direction. At least you got a chance to win then. So I started introducing loans, not just to other mortgages. What I thought, the sort of trigger point in my head was, why would anybody, if you were going to be a lender, why would you want to be a mortgage lender lending at 1% fixed for 5 years.
Yeah.
When there's these guys in Manchester who are lending at 1% per month on exactly the same asset, exactly the same loan to value.
Yeah.
And for the borrowers, it's a product that is needed because it's short term, but it's available very, very quickly, so it can get you out of a hole, or it can mean sometimes that you can purchase a property that otherwise you would have completely missed out on. Okay, it's a bit more expensive, but it's an option. And I decided one day, I woke up and said, look, I'm giving all these loan opportunities to another lender, I want to become a lender. And similar to the poker club, people are like, you're mad, you know, you can't be a lender, you don't have any money.
Yeah.
It's a fundamental problem.
Yeah.
And I said, well, I know people with money, and if I'm going to lend Sam 100 grand secured on his house, I only need to find 4 people with 20 grand or 10 people with 10 grand to put the money in, and I'll give them the interest and I'll keep a bit for myself. And that is West One Loans. That was West One Loans. It's a bit different now. And over a period, we built up quite a big loan book. So it became 4 equal partners pretty quickly. Myself and my father, a guy called Mark who had 25%. He was the first investor who really loved the idea. And he said, I love it, and I'll put money into loans, but I want 25% of the company. And at the time it was 25% of very little. And I thought it was worthwhile. And the 4th partner, Stephen, is still the MD of that company today. So, you know, cut a very long story short, we started doing 1 loan at a time. It's quite big numbers. People don't borrow £1,000 or £2,000 in the same way they do with short loans. Our average loan was £500,000. Lots of hundreds and 200s and 300s, but also lots of 2, 3, 4, £5 million loans. As we were discussing off camera, it became heavily regulated, and that was an amazing experience for me as well. Learnt lots of lessons. When I started doing mortgages, back with my dad, mortgages weren't regulated at all. There was no such thing as mortgage regulation. It was a code of conduct that people adhered to. So, you know, we started this company inviting investors to take a bit of a loan, and it went really, really well. We built up a £100 million loan book over a 5-year period. And we sold the business in August 2014 to a company that basically my deal was that half of the agreed value I got in cash, and the other half I got as equity in the group that acquired my company. So I was now going to own a much smaller amount of the company, but not just my company, like a whole group of companies. And it lasted a lot longer than everyone thought, but you know, it was never going to last very long, because basically what it meant was, like, from that day on, the deal was good. You know, it was good at the time. It was good for everyone involved. All 4 of us pretty much got different deals. Some wanted to go, some wanted to stay and build it. And I've learned a lot of valuable lessons, just, you know, all through the whole process of not just building a company, but then seeing it through. And, you know, there's a lot of good lessons I've learned, and over the course of the next hour or so. That was my first kind of big break, really.
So after that,
I woke up one morning and I said, not going back. Basically, the first day, I hadn't had a job for about 15 years, and I hated it.
I suppose that when you're now under a group, I suppose, do you have boss at that point?
Yeah, had a boss. I didn't particularly like him that much. We didn't get on as employee and employer, and you know, we had open discussions before, and we'd been friends for a long time, and we knew that it wasn't going to work. There was no question of, this could be amazing, we could work together for the next 10 years. That was never an option. The first day, because I love getting up and going to work. I don't see, especially what I do now, I don't find it difficult. I don't feel like I'm working. I've got businesses, I'm up very early in the morning, I go to sleep very late at night, but I do it for myself. And the first day I pulled my duvet over my head and said, I really don't want to get out of bed today. I picked up the phone and I said, I need to see you tonight. And he said, you're leaving, aren't you? And I said, yeah. And that was it. We managed an exit.
First day?
Pretty much. We managed an exit. I wasn't particularly happy with it at all, but all I was focused on was my freedom.
Yeah.
I was focused on the fact that if it took a year or if it took 2 years, whatever the agreement was from that day, I knew I was going to be free at a certain point. And free, not just to, you know, one of the things I wasn't allowed to do was run a lending or broking business, which I understand. You know, I sold my equity to these guys. They clearly don't want me to compete for a certain amount of time. But for a certain amount of time, not forever. And I wanted my freedom, and you know what, I left a lot of chips on the table, many millions of chips on the table, but I don't regret it at all, because now I am actually free. One of the things I am doing now is that I've started a brand new lending business from scratch, doing exactly what I did
after that garden leave and all the rest of it.
So I left in August 2016, or February 17, there was kind of like a negotiation period, and January 18, I don't know the numbers actually, January 18 I was free. I know that date, and up until that point I hadn't decided whether I was going to go back into lending or not. In fact, I thought that I wasn't, because I wasn't able to consider doing it again, so I decided to just wait. And in the meantime I was free to do anything but property and lending, sort of broking and lending, and basically ended up doing lots of property stuff. My contact book was full of that. I built up a good buy-to-let portfolio in very, very strong areas like Hampstead and Belsize Park and Kensal Rise, all of which I continue to manage now. And also explored, I meet new people every day, as you know as well as anybody. I really, really enjoy sitting down with people that I like, spending time with them, looking at angles. I don't charge for my time, I'm not a consultant. Really what I'm hoping to do is to meet the right person at the right time with the right business, because lesson 2 is about surrounding yourself with good people, and more importantly choosing your partners carefully. Because when people are kind of desperate to find a partner or to do something new, they make decisions that they might otherwise not have made. Like, if you're honest with yourself, you don't really like or trust that guy, but you've gone into business with him because it felt like the only choice that you had. And the amount of good businesses that I've seen fail because of those breakdowns in communication, those disputes or those issues, you know, it's something that I don't want to get involved in. And I think, you know, it is hard for people to say no.
It's mainly the politics, isn't it?
Yeah, it just, well, when money becomes involved, people change. That's just the facts. You know, especially those that say, "Oh, I don't care about money," and you know, it's never going to affect me, because I think it's just the bits that make businesses successful are not the easy bits. The easy bits anybody can do. You know, it's easy, it's fun, you're making money, everyone's high-fiving, ringing the bell, doing deals. When things start to go wrong is when you find out who the winners and losers are. You know, who can cope with the stress, who can make the difficult decisions, who can cut off expenses before they become an issue, and things like that.
So you did that, you're now starting up Tab, so that's the actual name of it. It's lending, it's started up, you're now a team of 5 or something like that.
So started a new lending company called Tab, tabldn.com. We are a short-term loan company. Everything we do is secured on property. So from an investor point of view, we're not just giving money to people who want to borrow it, we've got security. We have a charge on a property in the UK. If all else fails, we can realise the asset. We're not lending on people's main residence, so we're not a home owner loan. You can't come to us to buy your first property. It's a commercial loan. So all of our loans are for business purposes, usually secured on either buy-to-let investment property or commercial property. And a good example of what we do is where someone goes to auction, they buy a residential house that needs doing up. Let's say they're paying 300 grand for it. We're geared up to them really, really quickly. So if you put your hand up at auction, typically you've got 28 days to complete. And you're never going to get a mortgage in that time. You know, even when mortgages were great, getting a mortgage in a month was tough. So what we do is we geared up to that really quickly, and we assess the property value first, because that's our safety net, that's what protects us and makes sure. In my last company, we lent nearly £2 billion under my stewardship, and we never lost a penny of anyone's capital. and that I'm extremely proud of.
Yeah.
And I wear it on my arm like a badge of honour, because moving forward it shows that lending money is easy, but getting your money back is the difficult
Exactly,
thing.
yeah.
And lots of these other loan businesses where you get massive 100% on that, you've got bad debts and you have to manage how much you lose and how much you chase versus how much you make. Whereas my business is more about protecting capital first and pricing according to risk.
So what do investors actually get back? So they say they gave you 100 grand.
Yeah. All right. So we're not a fund. So we're not a fund. We're not a fund, we're not a deposit taker, so we raise money on a loan by loan basis.
Okay.
So let's go back to this scenario where we lend you 100,000. Let's say you're buying a property for 300 grand at auction.
Yep.
I'm lending you 200,000 to complete the purchase. So we take a first charge on your property. You owe us £200,000 before you get any money back yourself, and you're paying 1% per month, so £2 grand a month.
Yep.
What we pay investors is 75% of what we charge. So we charge 25% of the interest we receive as a management fee, and everything else gets distributed to investors. So in the scenario where we charge 1% per month to you, TAB retains 25%, 0.25 a month, 0.75 a month is paid to investors on a monthly basis, so 9% per annum. And what investors do, the idea is for them to diversify their money into lots of different loans. So minimum you can put into one loan is 25,000, but we encourage people to put, say, 25 or 50 in 10 loans rather than to put £500,000 in one loan that they like.
Yeah.
There's a few different reasons. Firstly, all of the loans have got slightly different terms, so money's coming back bit by bit, which gives you an opportunity to keep lending new money rather than it all goes out, it all comes back, it all goes out. So when a loan redeems, we pay investors their money back. We don't hold anybody's money, we don't tell them what to do with it, we just make loans available to them. Okay.
So you've got that going, you've got another business as well, haven't you? You've got...
Yeah, so I bought a residential block management company at the sort of early part of last year. Premier Block Management, I think it's pbm-property.com.
Oh, there's no...
I'll double check. Yeah, Premier Block Management. Interesting, just the whole scenario. Like I said to you about meeting good people, Gary's one of the first people that I met when I left West One.
Yeah.
And I got my new little serviced office, and I was sitting there on my own, sort of thinking, phone's not ringing, no emails, cool. I was used to having 150 emails a day and people queuing at my desk. And I've known him a long time, but he had this block management company, and he was basically coming to sort of chew my ear off about his partners. He didn't get on with his partners. They didn't have the same vision as he did. He built all of this and he wanted to take it to the next level. And I was sort of coaching him through it, really. What would I do? Normally what I say to people is, this is what I would do. I mean, don't do it without taking some more advice. But this is what I would do. And we were talking for a long time, and at a certain point I said to him, look, if they'll, I'll buy. There was 4 partners, each had 25%, of which he was one. And I said, I'll buy the other 3 partners out. How much do they want to walk? And over about a 6-month period, so that sort of went away, came back a couple of years later, and then he said, look, I need to get rid of them. Either I'm going or they're going. That's the only choices. And I made an offer, and we negotiated, and in the end I bought 75% of the company. This business was fundamentally different in a lot of ways to my other businesses, apart from the fact that I'd never been into someone else's business and started putting my stamp on it. It was always mine first. And so I was interested in how that would go, but really the reason I invested in that company is first and foremost because of Gary. Back good people, simple as that. I back him, I believe his story, I believe his vision. I think he's got skills I don't have, and to me that is extremely valuable. But this business, if property prices halve and interest rates double, all of which in the back of my mind is a slight concern, a slight worry about where we're going, our income's not affected. We collect ground rents and service charges, we run 75 blocks with 100 flats in roughly, and every single one of them has to pay their ground rent and their service charges at exactly the same level for the next 100 years. So if we get this business right, it's 100 years of income. We've currently got 7,000 customers paying us quarterly, contracted to pay us quarterly fees in advance. So it's not draining our cash flow. I'm not worried. All we need to do is look after our customers, which we really are good at. One of the other things that I just loved about Gary is how pro-consumer he is.
Is that Entrepreneur's tip 3?
What?
Being pro-consumer.
I think in this market, you know, so the point I'm making is other companies that do in that space are all about the add-ons.
Yeah.
So how much money can we make out of loading the insurance premiums? How much money can we make out of the cleaning services?
Yeah.
We're the opposite. We want to give our customers the best possible service, and we want everything to be as cheap as possible, so we can justify charging them properly.
Yeah.
You know, yeah, we might charge a bit more, but over the course of 12 months, it's going to cost you half.
Yeah.
You know, that's our kind of message.
Okay.
No, I think tip number 3, just coming back to PBM, what I found fascinating about that company is the culture.
Okay.
So before my relationship with Gary, before my investment in Premier Block Management, I'd never heard the word culture used in business.
Okay.
Like, to me, maybe I just had my head in the clouds, or maybe I'm a bit older than you, or a bit more old school, but to me, it was business. Like, you deal with other stuff outside the office.
Yeah.
And obviously now the world has changed, and I understand why it's changed. What I really didn't understand is how powerful it can be to have such a great culture that everybody buys into, and the types of things that we do there that we certainly didn't do in my old firm when I wasn't running it was looking after people, everyone leaning on each other, you know, departments coming together so that we don't bitch and moan if someone's off sick. We pull together and try and do their job well for them so they've got no to come back to, you know. And we do gratitude meetings every Monday morning, and we all sit around and talk about things that we're grateful for, and how can we, like, something we did or something we're going to do next week to help a customer that maybe our competitors would. It's brilliant. And I will roll that out through every company I'm involved in from now on. And I want to read about it and I want to learn about it, because people are happier in our office coming to work. They don't earn loads more money, they don't get perks that other people don't get, but they're happier as part of the family.
Exactly.
And businesses don't do that, and that is my tip.
It's always the top companies that do that, though.
These are
forward-thinking businesses.
These are lessons that we've learned from Microsoft, IBM, Google, Apple. You know, you look at the green grass on the floor here. You're not the first person to do it. You know, and the pool table, like in my parents' age, pool table in the office, not a chance. You know, never. It's a distraction, it's a this, it's a that. But, you know, ultimately you want to keep people in the office, you want them to be happy when they come to the office, you want them to prefer being here than being at home. I think it's really, really important. It's something that I wouldn't, like, that I will make sure is rolled out in other businesses.
100%. So that's tip for culture and basically looking after
well-being. Start looking after your staff and like
gratitude meetings. That's an interesting one.
It's very over the top. And it's hard for me not to giggle a lot. But
well done.
I'm learning.
But it's
look, Gary will be watching this, so I need to be careful. But they hand the trophy round every week.
You
know, for someone who's done the best deed. And
we actually had the point where we was going to go ahead and have the trader's hat. The most profitable traders wears this trading hat, so you knew who the best trader.
Kid.
So you know who the best trader was in the office, and so on and so forth. Like most.
Yes, Sam, we know you're wearing the hat again.
No, not me. It's just.
I've just done 12,500 steps apparently.
Mate, it's because you're doing that. You're cheating. Getting in steps up. So after that business, I know you've been busy working on a new project at the moment.
Yeah, I'm working on something huge. You know, when I started West One, the idea was to be a bank. That's how big the idea was. So when my friends at the time were, apart from Stephen, who thought it was a great idea and came on board, for everyone else, they just thought I was mental. And this time round, I would say my idea is equally as big, if not bigger. But I've got a plan to create some tech around the property space that I think fundamentally changes the way people invest in real estate in the UK for now. But certainly worldwide at some point. And maybe what we'll do is we'll have a follow-up to this, maybe episode 19 instead of episode 9, and you can talk about how the other businesses are doing and how the culture's going and all of that, and I'll maybe talk a lot more about that. But what I have been doing, and the interesting bit for me now, is I basically I realised I was out of my depth. There's a lot of things I do understand about what I'm trying to achieve, but there's a lot of things that are very, very new to me.
Yeah.
And the tech side was the bit that worried me. When I was a kid, I thought I was quite tech savvy, and now I need to call my nephew to ask him how to turn reset my iPhone. And I just didn't want to even start building or spending money on something that was going to be inadequate.
Yeah.
So I've instructed a consultancy firm to act for me to document my idea.
Okay.
And I've gone through a 3-day what's called an app discovery phase. We've done all 3 phases, and I'm waiting for the report to arrive. And in the meantime, I've been researching a huge amount of stuff. Definitely not going to be answering to him. He hasn't rang me back for a long time. So there's a lot that I can start putting together, but my idea is, what I want to do is put down a business plan, and I want to go out and raise some money to build it.
Yeah.
And in order for me to build a comprehensive business plan, I need to do a lot of research.
Yeah.
One is the tech side. And I feel really excited about how I'm going to get this off the ground now, because they've showed me a way of doing things that you wouldn't do for a normal business, that you would only do for a tech business or for an app business.
Yeah,
and
yeah.
I loved the process. Absolutely.
It's like learning
loved
on the way of creating what you want to do as well at the same time.
Good people with a structure for how to get this idea out of my head and onto paper.
Yeah.
And what we've done is we've worked on the MVP, which is the minimum viable product.
Yeah.
Now we can start to cost out what it will cost to build the MVP, and I can put that in a very small part of my business plan that says I need to raise a couple of million quid.
Yeah.
Some of it's used here, some of it's used there. Marketing, PR, podcast, whatever it is that we need to do. Legals, financial, regulation, put the whole thing together.
Yeah.
And it's basically a way for people to invest in property and start earning income from property from £1,000.
Okay.
So in this new platform, you'll be able to buy, instead of weighing up. I'll talk about it really quickly. There's two problems I'm trying to fix fundamentally in property. One is liquidity.
Yeah.
So saving up all your money and putting it all into one investment property, in my view, is a terrible idea.
Yeah.
Because if your tenant stops paying rent, which happens a lot, or your boiler breaks, or your all these unforeseen bills that could and do come out all the time, what you actually have is a liability. You have mortgage, you have interest rates going up, you have council tax to pay, you have utilities. So what I want to do is I want to take...
You have lawsuits.
Yeah. So, and good friends to help you out of it. So what I want to do is I want someone to be able to take their £100,000 and spread it across 100 different properties at £1,000 each.
Yeah.
And then you're not relying on one tenant. You're not relying, and you don't have to, you don't. And what we'll do is we'll manage it all for you and pay you. If you buy 1% of that property, or if you buy £1,000 of that property, we will collect all of the income. We will pay all of the bills, and we will distribute your share to you.
Yeah.
So you'll still get a monthly income from that property. You'll still benefit from the capital appreciation or depreciation, as it may be.
Yeah.
But I don't think fundamentally I need to convince people property is a good asset class. I think people aspire to own property, and they should do. Yeah. Owning property with a heavy mortgage at a high interest rate, maybe not. Yeah. But owning property and receiving income from it is a great idea. Yeah. And the other, so liquidity and diversification, they're the two things that I'm really trying to fix, because I think that it's very antiquated, the property market, and the way
people build. Is that tip 4? Maybe finding a problem that a good business is always solving a problem.
Yeah. Can be number 4. I mean, I when people ask me what I do genuinely think I'm a problem solver. That's how I look at issues. I like solving problems. I get a kick from it. Yeah. And if you do it well and regularly, then the potential to earn from it as well. Yeah. And that's also exciting, because we like cars and we like nice things. Yep. And ultimately, I'm doing all of this for a reason. Yeah. And I think. What tip are we up to? Because I've got another one. Well,
you can kind of go for. I was just going with one of what you're saying is finding solving a problem is the solution. But build businesses built around.
Yeah, I mean, if you can't solve problems, you're probably not in the right business. So in that respect, I think problem solving is very, very important. My ethos is a little bit different, which is I don't know how to solve every problem, but I know someone who does. Yeah. And maybe tip number 4 should be about just being honest with yourself and the people around you and saying, that's a fantastic question and I don't know the answer to it, but I will find out, and I will come back to you. And if you do find, and then you should find out and make sure you do the best job you can and make sure you get back to. I'm going to change positions enough. Yeah, I mean, these things, you don't need to be you don't need to know everything to be a good problem solver. You just need to use the tools at your disposal.
Okay, and so obviously this is going out. Can you say if it's app or desktop or it's an app?
Yeah, look, from my point of view, what I really want people to be able to do is to be able to pick up their phone, look through different properties that are available. So you'll basically have a sort of bid and offer system. So let's just fast forward to when we've got property being traded on this platform. It's basically the stock market for real property. Each property will represent a different company, if you like. And you'll be able to buy some equity in that for whatever somebody's willing to sell it for. And once you own it, you'll also be able to list your shares back for sale in the marketplace if you want to, either at what you paid for them, at slightly less, or at slightly more. So the reason I think this fixes liquidity is because if you've got £1,000 in 100 properties and you've got £100,000 invested, in order to get some of your money back, you don't need to put the property on the market, find the perfect buyer at the perfect time, who's then got to get a mortgage valuation and a mortgage, exchange, completion, legal costs. What you need to do is you need to go back into the marketplace and see, I bought these shares for £1 each. There's people offering to buy some of them at £1 and 1p, some at 98p, some at 97p, and you can sell bits off. So theoretically, in the middle of the night, you should be able to go on and match any bids against the properties that you've got and start selling off your position, so you can liquidate instantly. And it will be an app, because what I want kids to be. When I say kids, I mean like 20-year-olds.
So did you have like a due date in your mind of when minimal viable products going to be potentially ready?
I think very, very quickly I'll be able to show you, for example, like 30 screens that will look like an app, and it will be interactive, which I'll use for fundraising. That will show you what it will do and how it will work.
Awesome.
But I think I've always had an issue with tech businesses that don't have a plan to make money. They just want to build users and readers, just because I don't understand it. Obviously, there's a lot of businesses that have done very, very well. Like I said to you at the beginning, I'm a kind of P&L guy. I like to know what's going to be the profit. If I do 1,000 sales, how much money are we going to make? Because then I know how much we can afford to spend in order to get there. And just over a long period of time, this became more and more clear to me that as an app business or as a tech business, having £1 billion of property under management is seriously valuable, even if we don't actually own the property. And to be honest, I want to invest through. It's fixing a problem for me. Because I don't want to put all my money into one property either. I will be a heavy user. I'll be a buyer all the time. And if I've bought some shares previously at £1 a share, and somebody for some reason wants to liquidate in the middle of the night and get, they've put in 10 grand but they need 9 grand back straight away because they've got some unforeseen circumstances, then I'll be a buyer. And the amazing thing about the feedback I've got is everybody is interested. So one of the guys at the app company that's been helping me out, he's like, I want my 4 kids to be the first 4 customers. I'll manage it for them till they're 18. Instead of me saving a little bit of money and then giving them some cash one day, I like to give them an income producing property portfolio. And then that got me thinking about that, and then we started looking at ISA investment. Currently people have got their ISA locked up for 5 years, earning them 1% per annum. It's not efficient.
The property game is changing.
Property game is changing. You heard it here first.
So we still need one more tip out of you in regards to it. We need one more tip. Or what we can do, we can finish on the final tip and say, you know, if there's an entrepreneur out there, obviously you're helping entrepreneurs in the future, then aren't you, with this platform to be able to invest in property, which I'm sure a lot of the viewers are obviously interested in, being traders, investors, entrepreneurs, wanting to be an entrepreneur and all the rest of it. Entrepreneur. They want to be an entrepreneur, but they don't know how to start. So entrepreneurs.
Tip number 5 is ask for help.
Ask for help.
Yeah, you know. Like,
don't be afraid to ask
I am talking about my massive big idea, like my one big idea, openly on YouTube to your 80,000 subscribers or whatever you've got nowadays.
Yeah.
I think people would be very scared of doing that. People want to keep it close to their chest. They say, I've got an idea. Oh, tell me about it. I'm not ready to tell you yet. I'll tell you. And if you're going to nick it and do it better than me, then I'm probably not the right person to start that business in the first place. More than that, I think this business really needs me to be successful, because you know, I think I can do it better than anyone else. I genuinely believe that.
Well, that's the same as what Elon Musk did, actually. Elon Musk, when he had an interview and he was like, why you know, if you want to really change the world and all the rest of it, he goes, I'll release all of the blueprints of how I've built my electric car
for free.
Here you go, get on with it, because in order for this market to change, we need more electric cars, so come and help me.
I love that.
And so he just gave it out. So he basically kind of doing the same thing.
I was saying the other day to you, if other people have done this, it's compared to what I want to do, and I wouldn't invest my money in them because I know what they're doing wrong. Like they say they're going to report every month and they don't report. So to me, it doesn't matter how good the properties are. The properties are as well on their platform, but to me, it's just proved that these Muppets have raised 125 million pounds and bought property. That it's even more reason. The only reason this is going to fail is because we've done something wrong. You know, and because it's my business, I can only point the finger at me. I'm not the type of guy to say, well, it's your fault you didn't do this, and I was never going to work because she's crap and he's crap. It's my fault.
So you take responsibility when it's not your fault.
Well, it is my fault because I employed you. I employed the wrong person, or you know. So, I'm happy to fail. You know, I'm not scared. I think tip number 5 is, you know, don't be scared to fail. A lot of people, or I might have.
You are going to fail,
might be tip number 6.
How many people that are successful have failed? Like, you had your poker one, it failed, and then you ended up having a big...
like I said earlier on, you learn from your failures. When things are going well, you can go and tell your mates how great you are, but you know, you haven't felt the pinch yet, or someone hasn't let you down, someone hasn't left and stolen from you, or someone hasn't done, you know, you haven't actually had the trouble, like the bit that's going to make you successful yet.
100% agree. So if all of our subs want to go and find out a bit more about what you're doing, how can they get a hold of you, or how would you like them to get a hold of you? Is there a website you'd like to send them to find out more about what you're doing? Or
no, if anyone wants to reach out, dk@duncankrieger.com. dk@duncankrieger.com.
Nice little pop-up.
And my Instagram account, probably.
That's what I was popping up. Instagram. I thought that's what he was going for. What was you going for?
An email address.
Oh, what are they doing that? You're building a future of property.
Email is a system where you can type an email. Alright, so I'm running an Instagram account called 993DK. It started because of my obsession with Porsche.
There we go.
What's that mean?
Boom! I'll do it for him because he's not doing it. Loads of pop-ups, and we'll put the email in the description as well for those guys that are still email based.
I am old. It's official. Hit me up, 993DK. DM me, man.
Cool, guys. Thanks for watching this episode. Don't forget to thumbs up, comment, and subscribe. And we'll see you in the next Entrepreneurs Talk to Tea, which will be double digits, which is going to be a big one for us as well. Don't know if we can match this one. We'll have to try it as hard as we can, but it'll be a big one nonetheless. Catch you guys in the next episode. Thanks for watching.
Cheers, bye.
Cheers, bye.